Okay, so we're going to start, and as I requested you guys last time that we have to prepare before we start today, so we have to do it our homework. It's just about preparing your uh, bio, right? So, Dexter, if you brought it, does it mean you have not done it, or?
Exactly. Oh.
I need to print mine. Can I just print it?
Sure, sure. You guys have to read it.
You have it on your phone.
No, honey, I don't have it on my phone.
Okay.
I'm not that high tech.
I love those.
Actually, no. I should have done it on my phone, but I put it on my.
I emailed it.
So you want to do it, Susan? You're ready?
I guess.
Okay, come on in here.
What?
Yeah, you just read it from
No
here.
way.
Because we want all to learn from what
Oh
you
my
have prepared.
God. Okay, I don't even know if I did it right, but. Am I on live?
Yes, you are live.
Okay. So I put, and correct me if I'm wrong, I go after graduating from York University with a bachelor's degree in human resource management and working for one of Canada's #1 communication companies, I decided to change path and seek a dynamic and challenging career in the real estate industry, where I can utilize the skills developed through my past experience and post-secondary education. Now, having been involved in the real estate industry for over 3 years, I'm considered to be a professional real estate property negotiator in my company. I strive to deliver excellent customer service to my clients through exceptional advertising, networking, and marketing my work in creative ways. My goal is to assist my sellers get the best value for their property and to negotiate the best possible deals for my purchasers. I take time to teach and instruct my clients on relevant laws, benefits, and pitfalls in the negotiation process in order to get the best price. I've gained recognition in the field as a hardworking, sincere, and honest individual whose main priority is to provide complete customer satisfaction.
That's very good, actually.
Nice.
Thank you.
Who's next? Michelle, you want to go?
I have to print mine.
Oh, you have to print
So.
it.
You have yours, Hassan?
Yeah, I'm trying to get on my phone.
Kelly, do you have yours?
Oh, I'll just wait.
So that means you
What?
haven't done. Oh, you've done it. Okay, you want it.
Why don't you go ahead?
Short.
It's okay. Go ahead.
That's okay.
I think I need this. Okay, go ahead.
Hello, I'm a salesperson in Markham GTA and a member of the Treasuria in Vico MLS. I've listed and sold gas stations with convenience stores, country-style franchises, car washes, vacant land zoned for subdivisions and commercial properties and businesses. I have also sold condominiums and marketed a resort subdivision and designed marketing materials for flyers. I'm currently a licensed real estate person, 13 years. I'm organized, efficient, self-motivated, have strong skills in oral communication, decision-making, negotiating the needs of customers, as well as dedicated to professionalism and highly motivated towards goal achievement. I've completed numerous business courses as well as a property management course and a CCI course and have successfully managed a rental property for the last 20 years. I'm continuously upgrading my education with various types of real estate related courses to comply with the mandatory updated Real Estate Council of Ontario regulations. My current involvement is with the sale of businesses and properties. I also have a Canadian Condominium Association and Toronto and area chapter member. And I am a member of the Lifeguarding Society and have a current CPR certificate. I have been in the business for 13 years, as I said, and I am highly motivated towards delivering my clients. Thank you.
Wow, that's very good. It was good. Not short. Hassan, you ready?
Yeah.
Go ahead.
Okay. I do from here?
No, you're
You're
going
live,
live.
by the way. That's okay. Take your laptop there, but stand on that way because the projector's coming on your screen.
Oh, okay. That's fine.
Good.
Yeah.
Move the projector, please. Actually, I can move a little bit this way.
Too tall.
Okay. Go ahead.
Good.
Go ahead.
A few years ago, Essen Raza jumped from the retail and accounting industry and started a career in real estate. His sales experience in retail, along with his strong financial background through accounting, has allowed Essen to combine his experiences and successfully implement them into his real estate career. Essen knows the value of genuine customer service and how important it is to everyone. He's always put himself in the shoes of his clients. Essen has a deep passion for providing benefits for its clients and producing optimal solutions and exceptional service.
That's good, short and sweet. What of yourself?
I wasn't here, but I can wing it.
Sure, go ahead, come on in. Yeah.
I have a degree in computer science from University of Toronto. Worked for IBM for a number of years in many different positions and projects. Learned a great deal from there in terms of negotiating, leadership, management as well, and customer sat. So the biggest priority was to serve the customers in a way that the customers are delighted. I have brought that experience to real estate now. I've been an agent for 15 years. My priority is to strongly negotiate the best possible price for customers. If it's a seller, the highest possible, and if it's a buyer, the lowest possible. And taking every deal to its completion. So working with the customer all the way to take it to closing. And at every point, the important thing is to serve the customer in the best possible way for the highest customer sat. Most of my business is from referrals, and that tells me that customers are delighted with what I do.
That's good, wow. You memorized it.
Michelle, you ready? Oh, why don't you give it to Richard?
Okay, so I know that Asif is live, the guy that was coming every day here, one of the agents, so say hi to Asif.
Hi.
So Asif, I know you're watching us live, so give your feedback. There is a comment section at the bottom of that page. If you go to realestateInFocus.ca and then click on live. Anyway, so today's session is about financing. I have quite a lot of guests that will be displayed on the screen, but from different banks, you will meet them. But I also requested Bob from National Bank. So he's with us today. So we have a live person. I will.
Steve is also saying hello.
Oh, good. So yes, I'm not going to claim that I'm a mortgage specialist or I know anything more much about mortgage, but I can tell you guys that we all, as real estate agents, have to be aware of the products, the options that are available in financing. It is, if not the key, one of the important keys to our success. The more we are aware, the more we can provide options, and the more options we will have for our clients. So for example, if somebody is newcomer to Canada, or they are self-employed, or they don't have enough income, different banks and different financing institutions might have different options for you. So if you're aware of it, it will help you to open opportunities that might otherwise may not necessarily exist before you not knowing this. So having said that, we will start. But I think before I want to start, there are a couple of quotes that I want to share with you guys today. Success is the ability to go from one failure to another with no loss of enthusiasm. As I was discussing in the past couple of days, you will face challenges in this business. As I said, people will break your heart. As I said, there will be buyers that will spend time with you, and then at the end of the last minute, they will go with someone else. All those things are going to happen. But I think if you want to be successful, you have to continue, and you will not lose interest. That is the key. If you lose interest, then that means you failed. I mean, that's how successful. And following this quote, I have another quote that's also interesting. It's not whether you get knocked down, it's whether you get back up again. It means this will happen. People will beat you up. It's part of life. As I said in our first day, that people might be rude at your door knocking, and things like that is going to happen. It's part of job. It's up to you whether you want to continue or say, you know what, enough is enough. There is nothing easy in this life. But I think, as I was saying in the past couple of times, a couple of days, that I think enough has been done for you guys. I have been through different creative ideas that did not work for me, and I failed, for example. And I then learned from those mistakes that I made. So today, and for this 5-day session, what I'm sharing with you guys is I have already done half the battle for you guys. That means you will not go through the routes that I have tested and it did not work. I have spent money and it did not work. I invested my time and it did not work. I boiled it down to 3 options that I gave you guys on the first day, which was farming, community, and circle of influence. So you might also do the things that come up with creative ideas and spend money and it may not work for you. So I think you guys are lucky that I have done half of the job for you, and I'm giving you what I have worked for me and what did not work for me. So your chances of risk is a lot lower now. Okay, so since today is about financing, I think it starts at very basics, and this is a basic question that people will ask you. The 53 videos that I have on YouTube and I have uploaded, this is the most viewed video, and this is the most that I received responses. So there is a lot of interest in market for whether should I buy or rent because of uncertainty in economy. And this video illustrates that why should you buy and why should you not rent. So let's watch it together and then we'll discuss in more detail. Hello and welcome to Real Estate in Focus. Today we are going to discuss about an important issue that buyers face. Whether should I buy or keep on renting? Before I answer that question, you have to find out if you're approved, whether your financing is approved to allow you to buy. But let's assume that you're approved to buy a home. Of course, we buy a home for many different reasons. It's our dream that we want to achieve. It's due to the sense of security, independence, and freedom. And also it can be an investment because it appreciates. There are no taxes on capital gains on the houses we buy. Or it's a good leverage for investment. Whatever your reason might be, for me, the most convincing reason to buy a house is it will force you to save money for your retirement. Let's assume that you're paying on average $1,000 every month for the next 25 years to rent a place to live. After 25 years, you will end up paying $300,000 and you have nothing in your hand. Let's say that today if you buy a house and you pay double of that, you pay $2,000 every month for the next 25 years. Of course, you will end up paying $600,000, but you will have an equity of $300,000, at least a house that's worth $300,000. So at the end of the day, it is about forced saving, appreciation, investment. All those things are just a bonus. Home ownership is about forced saving. So the real question should not be whether should I buy a house or not. It is whether you can change your lifestyle, whether you can accommodate to have these expensive monthly payments. It is about a way of living. So hopefully today's point about buying or renting will solve your dilemma that you're facing for a long time and helps you to take a step forward and take action. So as you can notice, it is home ownership is not about as some people might say every year it will appreciate. Yes, it has, but in the past 10 years, real estate has appreciated on average 5%, some places 8%. But I think that is something that nobody can guarantee. I think if someone wants to guarantee that, look at U.S. market. It's not very convincing for a lot of people to say that real estate will go up forever. I think the best convincing argument for your client is that it is about your lifestyle. If you rent, you might pay a little bit less, but especially with today's interest rate, even that argument is kind of a little bit weak. But so that basically even makes your argument much more stronger that you know you can rent or you can own, but you will be forced to save when you retire. This is the best way to have your saving for retirement. Even the stock market. So we are not counting that you buy 300,000 today and it will be 600,000 5 years down the road. No, we're not claiming that. We're saying that it will remain 300,000. Anything else that comes, which is appreciation and whatever else, is just a bonus, right? So I think that is a good argument, and this is a question, because I think this video of mine had a lot of response on YouTube, it seems that there is a lot of interest. And I have done this little calculations that if you're paying $1,000 a month, you will, after 25 years, you have spent 300,000 with no money in your pocket. But if you even pay double of that today, you will have at least 300,000. The house at least is worth 300,000, same as today's price. You're not considering anything else. By the way, I really like it what Susan is doing, writing. Did you guys know? I want to share something with you. They say that if you say there is the rate of retention is 7 times. So that means if you say something, the chances of remembering it is increasing by 7 times. If you write it, the rate of retention is 30 times. You won't believe it. So if I ask you to something and if you repeat after me, it brings up the rate of retention by 7 times and writing by 30. And these things, as you know, we are here for a couple of hours and then we continue with our life and forget it. So I think she's doing a good job. These are some of the facts that, you know, as we are always talking about providing a good service. You cannot hide these things from your client. Some agents do. They say, oh, your mortgage payment is just $800 and then your rent is $800, so it equals out. No, it's not just the mortgage payment. You have property taxes, you have insurance, you have utilities that might be included in the rental apartment, and there is always repairs and maintenance. It depends on the age of the house. So these are some of the expenses that you have to be upfront and disclose all these things that exist in property ownership. So benefit of real estate, I think the biggest benefit is leverage. And this has been possible, I think, since the introduction of mortgage. Don't quote me on this on the exact date, but it was sometime in 1950s or 60s, around that time, after the Second World War, that this idea of mortgage came into the market. And it was promoted heavily by financial institutions. The idea of home ownership, and as you know, all the good big ideas come from United States, and this came from there. And the idea of American dream was ownership of home. So I think that idea of mortgage made it possible that only with real estate it is possible to leverage, which means you don't have to pay the whole amount in cash. You can come up with 5 or 20% or whatever requirement is down payment, and you're holding a big, huge amount of investment with just 5%. It's only possible in real estate, and it's only possible because of introduction of these financing options, which is mortgage, which did not exist much before in last centuries. So that's how the housing market boomed, and this is an example. So let's say if you pay cash, what is the meaning of leverage? I think this kind of illustrates. If you pay cash for a home, 300,000, and it increased to 345, you only make 15% on your money, right? If you pay all cash, but you leverage it. If your down payment, if it is 20% down, of course, Bob might give us some products that are much lower than 20%. But let's say even if you put 20% down, as you can note, your rate of return is much, much higher, right? I think, as I was saying, this is what I count on, the principal payment. This slide was prepared in interest rates were like 5%, and right now amortization is allowed up to 30%, right, Bob? Not more than 30%, right? So yes, but basically in 5 years, if you're paying 60,000, which is 20% down, you're getting back 30,000 in principal payment. That's what I call forced payment, right? That means you're forced to save. That 30,000, that is the exact amount, $27,581.98. It is not made up. It is the exact number that you will have as an equity in your home. And actually there are banks, I know one of them, which is RBC, I don't know about other banks, I don't know about National Bank, that they provide you equity line of credit, equity home plan line of credit, something like that. It's not just a line of credit. Basically, the principal payments that you make, it goes towards your line of credit. So today, when you get the mortgage, it is zero, and as you go, the line of credit increases. So in 5 years, you will have that money available in your line of credit, which you can use for other purposes in life. So this is only, appreciation is just a bonus. So I think this is just an example. If a property appreciates 15%, and if you have made principal payment of 30,000, you have already taken back your money back in 5 years. This appreciation is based on 3% per year, not like 7 or 8%, which is right now in the market. I think the other beauty of this is that we pay taxes on everything except in our principal home. There is no tax. You make 100,000, it is all yours. You keep it. This is the only thing that you can make money and you don't pay taxes. Otherwise, capital gains is 23%. And if you make 100,000 as a business income, it is close to half of it gone to government. About 46%, something like that. Half of it. No, capital gain is about 23%. I'm talking about business income.
Half of the gain is that will be taxable.
Right. So from the half, it comes to about 23%.
But if someone has a principal home, they're living in it, and they buy another home,
Mm-hmm.
and then they sell their principal home, they don't have to pay capital gain and move into the new home, they don't have to pay capital gain yet, correct?
Yeah, you're asking the accountant question, but generally if you sell your home and buy another one, it's fine. But if you hold two at the same time, CRA might ask you a question that what's going on
If you
here.
hold two at the same time, but prior to, like, basically moving into the second one, you sell the first one, which is your principal home.
Again, that is a CRA, I mean,
That'll be tax-free.
adjustment.
Yeah, it used to be $500,000 in a lifetime, I don't know.
No, that one
No.
is not for
Principal
your
residence.
principal, I believe your principal residence, when you sell it, it's not capital gains. But if you have a rental property and you sell it,
That's
that is
capital.
capital gains.
Can I just
Yeah,
say something?
But I'm sorry.
Sorry, if you buy a new one and you want to move in that one, and the previous your principal residence get the appraisal done, and even if you rent it or whatever, that gets locked, so that would be tax exempt. Because I have done it, so that.
Let me elaborate on what she's saying. So let's say if you have a rental property, and if there is 100,000 equity and you go and refinance it, because it is a loan, you don't pay any taxes on it. But today you're not paying taxes, but when you sell it, then whatever you gain, then you pay taxes. So whenever you do refinancing, there is no tax. So you keep the money, maybe do some business or buy another property or whatever.
No, since what I was saying, if I don't want to sell my principal residence now, I want to rent it, but if the price has gone 200,000 up, so if I get appraisal today and rent it, and that is locked in, that is mine, 200,000.
Okay, so if it goes up.
Okay, so you're saying you're shifting from a principal
Yeah,
to rental,
to
yeah,
rental.
but I think to her point, luckily I have not yet been audited by CRA, but let's say the people that have been, they share that everything you do, you have to document it.
Yeah.
So for example, in her case, she has to literally write in her diary that
I got
on such and
appraisal.
such day,
Appraisal.
yeah, I
Appraisal.
appraised it, and then this is the time I shifted my mind from principal to tenanted property.
It's not just
Documentation.
any documentation, it's a actual appraisal. I have, so that's where nobody can dispute it.
That's good.
Another scenario that you might be talking is if you have two houses, but you have established in the long run that that house is your principal, because usually you give that address to all your documentations to rent. As long as that's your principal and you decide to sell it and move to your other house, I don't think you'll get a capital gain.
Yeah, well, all these things are not a black and white issue. And even accountants may not necessarily 100% can guarantee. It is at CRA's agent's discretion. So they will decide based on the facts and your story that you provided. Like each case might be different. So sometimes in the past, for example, people bought pre-construction and they thought that they will live there for 6 months or 1 year, and then they change and buy another one, do the same thing for 5 years, and on each house they make 50 to 100,000. For some people, they got through it and nothing happened. For some people, CRA asked them, "What's this? This is like a business. This is not your principal home. You keep on shifting every 6 months. What's going on?" So each case will be different.
Yeah, I remember that there's also the frequency in a year.
There is no state. So there is some misconception that you have to live minimum 6 months or 2 years. These are all misconceptions. There is no such rule that you have to live for a specific
It's
time.
not, but if you get audited and they see the frequency of it,
It
then
depends.
it'll become.
Yeah, and I think they look at your story. So, for example, if something unfortunate happened, let's say someone got divorced or dead in the family and they're forced to sell it, then they understand. It depends. Each case is different. And that's why we never advise our clients for accounting or that kind of a thing. But in general, for example, I have seen people also, they have a home in Barrie and then they have a condo in downtown Toronto. So they're not paying, they're both considered principal home because their family and kids is in Barrie, but they come here during the week. So they're, for 5 days they live in a condo as their principal home because they work downtown. On weekends they go to their home in Barrie. So they have two homes, but still they're both principals.
As long as they do not rent out either of the houses, yeah.
So they're living in both. Okay, so I think having said that, now you have convinced these guys, because there is a lot of people now in rental market. One of the people that you can target for your client is people that are renting, especially with today's low interest rates. On average, it depends on their credit history and everything else, but on average they are paying about $450 for each for every 100,000. So if their mortgage is about 200,000, they will pay only 900 for mortgage payments, and plus tax. It depends where the taxes are. In Durham region, it's much higher, but with taxes and utilities, it might come to 1,400, which is very affordable, and that's why the housing market is booming. As we all know, 70 to 80% of buyers are first-time buyers. So those slides that I displayed is material that you might use for your client to convince them to shift from renting to buying, and they can now afford because of low interest rates. Right? Now for them to be able, now for tenants this is tricky, they have to have a good credit scoring. We might ask questions. By the way, if you guys have questions about mortgage, I'm not the expert, so we have Bobby from National Bank. You might ask him. Yeah, so I will display this. These videos are just to open the conversation, but the questions should be asked from him, okay? So this is about credit scores, and this is an interview with David McGee from Royal Bank. Some of you might know him. I ready to buy a home? To answer this question, today we have David Nagi from Royal Bank, a mortgage specialist that's working in this industry for over 20 years. So David Nagi, welcome. And we have President Focus. How can you provide us an answer for this dilemma that I have faced?
Sure, no, absolutely, and I think it's really important that, for first-time home buyers, if they have, prepare themselves a little bit before they step in to go and buy a home. Probably the first thing that they should look at is their credit score, see where they are, see what their score is now, and if it can be improved before they actually put in an offer on home. The credit score is generally calculated. It's simply, in most cases, it's simply a formula that relates the balance on their card with the limit on their card. So I've seen clients, for example, who maybe have a score below 600 simply because they have a credit card with a $1,000 limit and they owe $1,000 on it. I've seen them bring that score up by over 100 points simply by paying off that card. So the credit score is something that can be generally improved very quickly. The other thing that's always a question is the down payment and how much is going to be required. The rule of thumb is 5% for a down payment. The 5% is can be from many different sources. One of the best programs to take advantage of getting the 5% is going through the RSP and the Home Buyers Program. With the Home Buyers Program, the government will actually give you you'll actually get a tax refund if you're contributing through an RSP. So in some cases, clients can actually use that tax refund to kind of boost their down payment that's coming to them. If the client doesn't have the savings, doesn't have time to do the RSP contributions, the other thing that we can do as well is also offer mortgages with cashback. The cashback then would just come to the client on closing, and it would serve the system with the amount that they're short for their down payment.
Thanks, David. Hopefully these points were helpful for you. Till next time, good night. So any questions? Yeah.
Maybe Bobby can you go over the RRSP?
Why don't you come here, because there's some people watching us live, so.
Yeah, okay.
Yeah. Oops.
Sorry.
Okay, that's fine. Okay.
Okay, RRSP, you can withdraw up to 25,000 per person, and you can use it towards a down payment. And that is kind of a loan for 15 years. You have to pay it back to the bank within 12 months, and which is a very small portion of your percentage. It's about I think if you're withdrawing 25,000 or $20,000, it will be about $30 to $35 per month you will be paying back. And that is kind of a loan. You have taken the cash out, plus you still have the RRSP to pay back in 15 years.
There's no tax implications of
No,
taking
there's
it out
not.
of the RRSP?
No, not at all.
Okay. Thank you, Bob.
Is that only for first-time buyers, though?
It's only
Only first-time buyers, right? Because if you are buying from
Repeat
second house,
buyers,
you cannot
it's
do that
not for the
RSP
repeat
thing, yes. I just thought maybe you should know.
So you have to put it back
That's
in,
important.
put it first into the
I did this
RSP
for
and then you're
10
taking
years.
it back out?
Yes, you have to have your money for 89 days in the bank. There's another RRSP. Then you can withdraw that money.
Can you only withdraw a percentage of what you have, or you can take out pretty much everything?
The max is
Put in it?
25,000.
Per person?
I noticed that banks are using mortgage brokers. There was an article I read about the rates, compared rates from different banks, and then a mortgage broker. So, but I noticed that the mortgage brokers somehow a little lower than the banks are being offered. So is it?
It's not the case always. Mortgage brokers, you don't know what you're dealing with. At least when you're dealing with a bank, you have somebody to back you up, and you can go back and talk to the bank if I'm lying to you or not giving you the proper information. At least you have a way behind.
Because I have this misconception in regarding mortgage brokers that they can haggle the price, the rate of mortgage. So I don't know how.
No, I don't think so, it's just the verbally communication with you and how they're trying to communicate to grab your business.
Yeah, I will also give my perspective. So thank you.
Yeah.
Thanks, Bobby. I think about your question, it depends. Every situation is different. So for example, if you have a good relationship with your bank, that means you have accounts with them, you have shown that you're a good client. Usually they try to beat any rate that anyone will offer you because you're a good client, make payments on time, your account is in good standing. The mortgage brokers are usually getting paid by banks paying them some kind of broker fee or referral fee or whatever you want to call it. And in some circumstances you might get a good deal because what a good broker will do, they will look at your circumstances and then they will find a matching for you. So for example, if you're self-employed, ABC Bank might not be the best option for you because they don't have good products for self-employed. But XYZ Bank might be the best option for you. So your account might be in ABC Bank, but your broker will find you XYZ Bank because it matches your criteria. So that is what a good broker will do for you. That's how you'll get lower interest rates because they will match your portfolio. So each person is different.
I think what he's saying, you know, how we get emails that says it's posted,
Yeah.
and then posted is like 6 point whatever, and then whereas our rate is like almost half that. Is that what you're talking about? Like,
Usually posted and discounted rate is like a 1%.
For customer rate.
Yeah. Yeah, but if you go to banks too, they give you discounted rate. Am I not right? Yeah. It depends on the client. Posted is for people that are not maybe having a good credit or whatever. So.
As a follow-up, how does it affect a person's credit if you go from bank to bank? Like, I heard it lowers your credit every time.
It does. Every time you do a credit check, it lowers. You should maximum do a credit check at least 4 times because every time you go to HBC for instance, and you want to get an HBC card, they're going to run a credit check for you. That's one down.
And then your
You see?
chances go.
It's not true.
Also, no?
There's a software, right?
Okay.
Yeah, there is.
If you're shopping around for a mortgage, any bank hits your credit, there's a code up there. That code stands for the mortgage shop. And that code will be registered under your inquiry that such and such person is shopping around for the mortgage. If you're going to 3 or 4 banks, just for the mortgage sake, you don't lose any points. If you're going from department store to the bank to the credit company, you know, there you lose the points. Then the banks think that there is something fishy and you're up to something and you might take out money and
It's also within 15 days, I think. If you do as many checks, of course, the limit doesn't affect it. It's
if
considered
it is
as
mortgage
one check.
related or if it is
Yeah.
if you're shopping for a car, then. But if you're shopping from credit line, MasterCard, then Visa card,
So that okay.
that affects it.
Okay, so as it was explained on that video, these are some of the important elements that is part of your credit. It is your past payments. These percentages might not be accurate, but more or less this is what it is. So if you made your payments on time.
Sorry, we have a question online that they're asking, does it matter on, like, if you go to a specific broker because of their experience with the financial institution, does that affect it? That can one broker get better rates than the other? Is that true or?
No, I don't think so.
No?
That's not true. Okay. So yes, so past payments that you made on time, how you're utilizing your credit, which means if you have 5,000 limit and you're using $4,999, that means you're up to something. You should always leave some room. That affects your credit. So if you have a limit of 5,000, use about 75% of that. not try to reach the limit.
That's where you lose your credit scores. If you're using more than 50% right up to the hill, you start losing your points. The best utilization is about 30%.
Yeah.
Is it better to utilize a portion of it and then pay it off every month, let's say for a credit card? Or is it better to carry some balance just to build credit?
The best practice is to pay it off. That also affects
So the more credit you have available, it will affect. So these two chunks alone represent 65%. So make payments on time and have enough money. This is again, we are not advising them on mortgage, but I'm sure you will come across questions. And remember, for the past 2 days, we are saying knowledge is power. So you have to be equipped with some basic ideas about mortgage as to what's going on, but always refer them to people like Bobby and let them handle. So there are different types of mortgages, and again, I'm going to play this video as I promised at the beginning of the session that we have a lot of guest speakers on the screen and one person luckily on live. So this is about the different type of mortgages, and it will give you an idea. Again, we can ask Bobby for further details. This is a mortgage broker.
Different realistic and focus. Home buyers have a lot of options when they're going to the bank or their mortgage broker to get a mortgage. Many different options are presented to them, and most of the time they're confused. So that's why today we have called Victoria to help us to understand the different options that are available when obtaining a mortgage. So thank you for coming. Hopefully you can help us with this.
Okay, there are several types of mortgages. There's open, closed, fixed, variable, conventional, high ratio, and collateral. I'll talk very quickly with your definition of what the various types mean. Basically, the difference between open and closed mortgage is your commitment to the bank. With a closed mortgage, you're committed to the bank for whatever the term of the mortgage is. It could be anywhere from 1 year to 10 years. So suppose you commit for 5 years, the bank will give you a low rate, but then you have to stay with the bank unless you want to leave, and therefore you pay a penalty. Open mortgage, you very often pay a higher rate, but you can leave at the end of your term. Very often it's a 6-month open or a 1 year open. Collateral means the bank will only loan 80% of the value of your property, and at any time you can draw back from that line of credit without penalty or without approval.
So I think the way I understand everything you have stated is that it depends on your situation. It depends on the person's situation. If they can tolerate and take the risk, they can go with the variable option. If they want to have peace of mind for the next 5 years, for example, they can go with fixed term. And again, it depends on their financial situation, if they want to go open or close. So everything can be customized to the person's financial situation. This is not a one formula.
No, and very often you can have the option of open and closed, so fixed or variable within the same mortgage as well. So that's advice to speak to your mortgage professional. Every client is different. There's so many types of mortgages out there.
Okay, thank you, Victoria, and thank you for watching.
Any questions? I think you might come across this question, which I have, especially in today's market, whether should I get fixed rate or variable? And especially these days, what is variable rate, Bobby?
Variable posted is 3%, and you do not.
Posted is 3%. I'm repeating because I want people to listen. Yeah, okay.
Yeah, it's 3% posted, but nowadays you do not get much discount on that.
Okay.
Maximum is 20 beeps.
So maybe
275 or 280.
280. So prime minus 20.
Prime minus 20.
Yeah.
It's not like prime minus 80 or 90 we used to have.
Yeah. And what is the rate for fixed 5 year?
Fixed 5-year posted rate is 529, but I can
529.
get,
Okay.
529 is a posted rate, but I can get you less than 4%. And if you want to go for 3 years fixed rate, I can get you 289, 279.
Wow.
Yeah.
Okay. Do you guys know why fixed rate is even at 279 and variable is at around the same? I mean, if you kind of, at first instance, it doesn't make much sense, but do you guys know why variable is so high? And I mean, usually there is sometimes a difference of 2% between fixed and variable. But these days they are both almost close to each other. Do you know why?
Prime is solo.
Yeah, but why prime is so low, and why the variable rate is prime plus almost 1%? Do you guys know why?
I think it depends on what the banks think is coming down the road.
Exactly.
If they think the rates are going to go up, they want to persuade people to go one way or the other, so they change the rates of the fixed or the variable depending upon what they predict is coming.
That's true. Just 3-4 months ago, I got mortgage at prime minus 95. So my mortgage is 2.05, so almost 2%. And then right after my mortgage, 3 or 4 months ago, the RBC and TD Bank were the first banks to change, and it no longer offered that kind of a mortgage. And here is the reason. Because what happened in Europe, there is a fear that Canadian market and economy will be affected or might be affected by European crisis that's going on. So if that happens, if there is a recession or if there is a fear of recession, Bank of Canada will lower the rates. Right now it is sitting at 1%. Prime and Bank of Canada rate are two different things, but they are dependent. Variable rate is always dependent on Bank of Canada rate. So if Bank of Canada lowers the rate, so imagine if my mortgage today is 2%, and right now Bank of Canada rate is at 1%. If it goes to 0, which is right now in US, my payment will be only 1%.
There's not much spread.
Yeah, and then the bank will not make much money. So that's why, because they're predicting or they're fearing that there might be even cuts in in Bank of Canada rates. So that's why the variable rate is almost very close to fixed rate. On the other hand, they think that Bank of Canada rates at least will not increase for the foreseeable near future. So in the next couple of years, interest rates probably, I mean nobody can guarantee future, but probably interest rates will not go much higher than today. So that's why a lot of people are getting into variable rate. And but I think, like everything else in life, these banks make life really tough. At where the rates are right now, it is very tough to make a decision, because 5-year rate or 4-year rate, for example, Royal Bank offers 2.99 for 4-year rate, and you say 2.79 for 3-year rate. So fixed rate and variable rate is almost same thing. I mean 2.79 and 2.8 for variable is actually 2.79 is even lower. So it's the same thing. It makes it so difficult. And this is something now a personal choice, whether you think in the next 3 years, if rates are going to fall, then you will be, if you're fixed, then you're paying more than 2 point whatever percent. So that's why it is a very tough job. But again, the information we provide you here, you have to be informed and explain them how this whole thing works. Let them make the decision. You and I can never make the decision for them. And even if they go to their bank representative like Bobby, or if they go to their mortgage broker, they will provide them. They are supposed to provide the information and make decision, not make decision. Nobody can predict the future. Opinions given by people like us, even by economists, they have proven to be wrong. So we cannot say what will happen in future, right? Any question about the type of mortgage? Well, about variable open, by the way, because this is another question that might come up, open. There is a misconception about the word open. They think variable and open is same thing. And it's not, right? And even some agents in our office ask me this question. They think variable and open is same thing. It's not same thing. Variable is a rate that goes up and down depending on Bank of Canada rate. And Closed or open is any kind of mortgage that you can give it back to the bank, pay it off with no penalty.
Anytime, within 6
Anytime.
months or a year.
There is also a closed variable and open variable.
That's what I explained, there's no open variable.
There is no open variable.
There is open variable, but
That is the same as open.
it's very expensive.
That
The
is
rate
expensive.
fluctuation with the variable rate is open, but the term is fixed.
Yeah.
That's how it is. The term is for 5 years, and the fluctuation is 3.25 minus 50 or 2.79 minus 80. That's how it fluctuates.
But like for example, there is a product like variable open, but I don't know
That
who
is
in their
that is
who in
expensive.
their right sense will take it.
No one goes for it.
Yeah, I've not, basically what open variable is that you're on variable rate, but you can pay off the bank anytime you want. But that rate is not 2.8%,
No, that-
probably it is 4%.
6 to 7%.
Yeah, it's much higher.
That is only for the
Expensive.
people who just want the property and they want to flip it. Right?
Yeah, it is good for if you do it something within 6 months or even a couple of months, something like that. That product is still there too. So no questions? Are we guys not lucky to have Bobby? Let's give him applause. Yeah, thank you for being. Okay.
I have a question. What's the down payment situation? Is there anything like cash back and what are the options for
Yes,
people
we
who
do.
don't have all the down payment?
We still have 5.5% cash back, but you have to sign it at the posted date for 5 to 7
Please explain what that means.
Why don't you come here and explain, because people are seeing live, yes. So why don't you repeat the question?
Yes.
What was the question?
Is there, what are the options if a person doesn't have the required down payment? So what's the required down payment? What are the options to work around?
Okay, the minimum down payment is 5%, but with National Bank, we give you a cash back up to 5.5%, but the rate, interest rate won't be any discounted rate, it will be the posted like 5.29 or 5.99% for 5 to 7 years.
I would not go for it. It's very expensive. I would
It
rather
is
find
expensive for that.
I would rather find the 5% from some uncle, rich uncle, or sugar dad or somebody.
Sugar daddy.
Yeah.
We can
Pay
give it
him
as a gifted down payment.
Yeah.
So what did you say about 5 to 7 years?
Posted rate,
Oh,
not the discount.
What is the posted rate now?
5.29.
Very high.
Yeah.
That is almost 2% higher than the discounted rate.
It is.
I think upon renewal of the mortgage, they offer posted rates in the beginning. That was from my experience.
What they do is they send you a letter, a renewal letter,
Yeah.
with all the posted rates.
That's right.
Most of the people, what they do is they take the term,
Exactly.
initial it, sign it and send it back.
That's right.
They do
And
not
they get
go
stuck
or
with
call
the
the bank,
posted.
and they are stuck for another 3 to 5 years.
Can you negotiate?
Yes, you should. You should negotiate.
Don't ask.
If you don't ask, you don't get.
Yeah. So yes, we get.
I have a question.
Yes, go ahead.
Can you possibly email us?
I always do,
Oh, I haven't.
you haven't seen one? Okay,
You can go
what
to
do you?
any bank and they will pay your transfer fee
Update
and everything.
whenever you have them.
Yes, you never got my email?
I know.
Okay, so
Business card or?
this will be the last video that we are going to play, and then we will go for break, okay? Appraisals are crucial. When you're dealing with a mortgage broker or like with Bobby from bank or with anybody, make sure, we have 5 days conditional, and even if the banks approve you, it is always a good idea to ask your representative at the bank or your mortgage broker that have they appraised the property. You don't want surprises last minute. Some agents are, when I say agents, I mean mortgage agents or bank representatives, they are lazy or they don't do this properly. They tell you there is no problem. And then when they go after those 5 days, you remove the clause, they remove the condition, and then you're surprised. They say, you bought it at 500, they say it is worth 450. Then they have to come with additional 50,000 plus the down payment. And it happened, especially, this was very common 2 years ago. The banks were appraising properties lower than what they were sold for because there was multiple offer, and that might be true even today, because if in multiple offer situation, usually you buy it for higher than market value, and banks don't like it. So you bought it at 500, they will appraise it at 470, for example. So in addition to your down payment, you have to come with another 30,000. And how appraisals work, I will play this video and then we will take a break.
I'll add something to that.
Sure. Yeah, go ahead.
Yeah, bank will take the purchase price or the appraised value, whichever is less.
Yeah.
They will finance based on that.
And this is not contestable if you buy it.
No,
No, it has to be
it has to be approved by
the bank.
The appraiser has to be.
In that case, could you just add another person on title?
Yes, you can do that.
Yeah. Okay, so we'll play this and then questions and then we'll take break. Okay, guys?
Sorry,
No, that won't work. Yeah, I
your
was just
question is
thinking.
something different.
Yeah, like if it comes down to it, say, another person.
But you have to fill in the gap, between 450 to 500, $50,000.
Regardless who comes on board, you have to come up with more money.
Oh,
Yeah. Even if you're a millionaire, you have to pay that 30,000 difference.
that's probably
Doesn't matter.
why.
It's not about qualification. See, banks qualify a person and they qualify the property.
Yeah.
This is about the property. It has nothing to do with.
Yeah, but what was the relevance of bringing somebody on board as on the title?
Well, in
If the
multiple.
qualification of a person.
Oh,
That's a
okay,
different topic.
irrelevant. Yeah.
Okay.
Hello, welcome to Awareness and Focus. Today we're going to discuss about appraisal. It is a systematic approach to evaluate the true value of the property. This is something that is in most cases required by a lot of lenders, especially and specifically when you're purchasing commercial property. But today we have Frank. He's coming from an established organization that works for a long time in this industry, and we will ask him that even if this was not a requirement from the lender, why is it important for purchasers to do an appraisal on the property that they're buying? So Frank, thank you for coming to our program, and why do you think this appraisal is important?
Well, it's important for the consumers to get an appraisal in order for them to get a peace of mind, to know what they're buying is true market value. Generally, consumers think they know it all and are being told from other realtors, other real estate agents, the prices, but they don't know all the sales. By getting an appraisal done, it establishes, as I mentioned before, it establishes a peace of mind that they know that what they're buying is true market value. They get to find out in the neighborhood where the sales are. There's times where they're told some properties have sold for X amount. Truthfully, they're the listing prices, they're not the selling prices.
Yeah, so bottom line, it's about peace of mind for the purchaser. They know that how much is the value of this property. So it will help before they put an offer together, they get an idea how much is the value of this property. Of course, you can get this idea from your realtor, but appraisal probably will be a second option.
We have no interest in the purchaser, right, in what they're dealing. We're not selling them the property, so we're not there to make commission at the end of the day. We're charging a fine fee for our service, and we're giving them what we think is what the property is worth and what they're buying. There's no other influences that we have in terms of making them pay more or less for a property.
So this is kind of an unbiased opinion on a piece of property.
Exactly.
Okay, hopefully this very small segment will help you and encourage you that before you purchase a property, and especially and specifically a commercial property, that you call them upon an appraiser, let them do the job and give you an alternative option, an alternative evaluation of the property so that you can have peace of mind. Thank you for watching.
Did you guys get this point? So a smart and informed buyer will do an appraisal. I think that is such a good idea. You only spend $300 to $400. It depends on location and everything else, but it is unbiased opinion about the piece of property that you're buying. But generally, appraisers, especially if it is from the bank, they appraise the property a little bit lower than market. It is not always true, but generally that's true. So if you put from my experience, when you go to appraiser, I mean, when you go to the bank, and bank, by the way, most of the time pays for the appraisal, right? National Bank does too, right? So when you have an agreement of purchase and a sale, like everything else, we human beings are influenced by external circumstances. So because they see the price on agreement of purchase and sale, they appraise it a little bit higher because that's the market value. When you go for refinancing, I have seen on the same property, they appraise it a little bit lower. So like everything else in life, everything is in this profession is not black and white. So your agreement of purchase and sale for sure will have influence in what they will appraise because it went on MLS, especially banks like things that are on MLS as opposed to private. But if the difference in gap is 5 or 10,000, they just close their eyes. The appraiser just says, I appraised it at 490, but it's appraised at 500, right? Because it's so close. But if he appraises it at 450 and you bought it at 500, they will not close. They will not let it go. So then you have to come up with a difference. So you have to be very careful. I had an agent or two in our office that their clients were really mad about this. That they didn't know about it and they waived all the conditions. And who has an additional 50,000, right? In addition to their down payment. So let's go for break. We have, I think we have actually, we have gone a little bit out of our time. So I hope that you guys come back.